Let's chat with the Intellect Design Management.
Oh, well, yes, absolutely. That's clearly the stock of the day, shining bright in an otherwise weak market. So let's go across to Mr. Arun Jain, the Chairman and Managing Director at Intellect Design Arena. Arun, hi, thank you so much for making time and speaking with us, and congratulations on a good set. Just wanted to understand, was there any bunching up of billings or one-off or seasonality that impacted the numbers, because they look rather strong?
Yeah, they're naturally strong, and that's what we prepared the organization over the last few years. And these numbers are in line with our own internal plan processes. So we designed the organization for 20% growth year on year. We achieved 19%. So between 15 to 20%, we should be able to achieve our revenue growth. And our EBITDA growth is over 33%. And that's a very satisfying for all of us that our intellectual property, the IP product journey, the technology journey is moving in the right direction. So we are becoming a technology company from a product company, so that we have the best of the client across the world trusting our Intellect technology. So it's quite a satisfying quarter for us.
Yeah, it sure is, and the market as well giving you a thumbs up on those earnings. But tell me, Arun, the margins as well have seen a significant jump. Is this going to be the normal run rate, northwards of 24%?
Yeah, that will be the ongoing rate. Our quarter-to-quarter number, I suggest investor not look at quarter-to-quarter number. Our LTM numbers are more better, because there are some licenses number can bump up some point of time, but 24%, we designed the company around that time. The 24 to 26% numbers can be there, but LTMs are the better metrics for us to look at it.
On a 12-month basis, what you're saying is that 24 to 26 is a more realistic number. But talk to me about the overall deal wins as well, because this quarter the deal signings have been strong, Destiny deals have been good as well. But despite of that, what's the funnel looking like? Is there's a bit of a delay in decision making at all, because your other peers have been complaining about that?
Yeah, so I think the three investments which we made in a company in AI, we put a Decision AI is the front. So a lot of noise is there about AI. Intellect is working on AI for the last 7 years. And we put Information AI to Decision AI. And that is helping us out in making the operational cost of banks coming down. And the entire technology what we are offering called eMACH.ai, event-based, microservices-based, cloud-based technology, which is make the system ultra simplified for the banking of $600 billion spent, is getting the attraction for us. So we got a deal from Philippines, one of the largest Philippine bank, selected us as a partner. We got a deal from largest Eastern European bank, OTP bank in Hungary. We got a deal. We got one deal from France, largest French bank selected Intellect technology, and one large US bank selected the technology. So I think these 4 deals from 4 different regions is making us having a good pipeline, because we are operating in 57 countries, and 10 countries are where we are significantly investing money in. So these are the movement that our pipeline is moved to 7,000 crore, 7,200 crore, if I'm not wrong on the number. But it's not about that pipeline number which is important. It's the quality of this decision making of some Hungarian bank, US bank, French bank, and Philippine bank selecting our technology that making us different.
Yes, and the Saudi bank as well added to that list, right? But just help me understand, Arun, how does the entire revenue, revenue execution track for this eMACH.ai product? What's the timeline of this, coming into the revenues? How does the order execution actually play out? And which other banks are you in conversation with for the adoption of this eMACH.ai?
It's a very, very interesting. We launched eMACH.ai sometime in February along with AWS, and cloud is the traction and AI is the traction. In last 5 months, we have close to 15 workshops with various banks, and we have still more than 20 more workshops to go before September 30th. So at this point in time, this is the excitement of sharing eMACH.ai with the bank. Cycle time of decision making in bank can be as large as 18 months to 24 months. But whatever the deal we are closing is getting accelerated because of eMACH.ai. So the decision cycle time, which could have been 24 months, is getting shrink down to 12 months to 18 months cycle time. So that's the current state of affairs.
Arun, you just earlier alluded to the fact that you're no more a product company, but you're a technology company. Tell me, how different are you from a traditional IT company, which is largely a pure services play? Because traditional BFSI seems to be moderating for the entire industry, but for you, fintech exposure is actually giving you a boost.
Yeah, I think very good question from the perspective. First is services company. So services company leverage the power of the human resources to be given to the client, and they work on the client orders, which is a service industry. They design a solution or build a solution for a specific problem solving. For a product company, we built the product in anticipation. We invested 16 million hours of the R&D efforts, which is in US term is equivalent to $1.2 billion, $80 per hour cost. That investment gives us a ability to suggest this is the way bank can make 30% operational cost reduction or 15% improvement in the revenue. Now this story is very different from the service story. And then technology stories we are calling, why we are calling technology, we have two technologies for no-code platforming and decision AI. These two technologies are differentiating us compared to Thought Machine, Temenos, FlexCube, Finacle. These two technologies are making significantly differentiated, and that's why I'm calling ourselves is moving from product company to technology company. So eMagnet.ai is a technology on which we can deliver core banking, we can deliver lending, we can deliver wealth management, we can deliver cash management, we can deliver liquidity, treasury, central banking. All are composable solution after that. So that's a difference where technology becomes the heart and products becomes the composability.
Okay, so the idea is to transition to a platform or let's say technology company, and products become something as part of the entire boutique. Arun, thank you so much for making time and speaking with us.